Hi everyone, this is Sector again. Today it's Monday, the 26th of November 2007. It's 45 minutes past noon London time, and what I want to show you a short trade I've just taken, and what I'm gonna try to explain the points as of why I've like I say, I've taken this trade. Okay, it's a short entry on the Australian dollar against the Swiss franc. It's based on the 4 hours time frame, and it's a typical swing trade. Okay, you know, the type of trend continuing trades that I take of the dynamic area of support and resistance. In this case, resistance, since we are in a downtrend. If you guys have been following my videos for quite a while, you probably know that what I call the dynamic area of resistance is basically the area between the 30 and the 50 simple moving average. And well, I've throughout the last day and a half, ever since last Friday, we've been retracing back up to this area. Okay, former areas of support as well. Basically, this double bottom there, former support, now working as resistance, and we also have the 61% Fibonacci right there. So basically, we have a few elements coming together at that precise level. Okay, I'm at the 0.9770, 75 more or less, somewhere around there. Like I say, dynamic area of resistance, previous swing low, this low I'm talking about, the Fibonacci retracement, etc., etc. Basically, what I was looking for is a breakout of the retracement trend line. You know, any type of reversal formation coming in the or being, you know, showing on the shorter time frames, and that's like I say, that's appeared in the shape of a retracement trend line breakout. Now I'm showing you my trigger chart, which is the hourly time frame. Basically, this is the retracement trend and marked in red, the one I'm talking right now. Talking about basically, we've seen a breakout of that retracement trend line with a 1 bar pullback. Actually, let me zoom in a little bit just in case you guys don't see that properly. Okay, right there. We have a breakout here with a 1 bar pullback, okay, signified by that spinning top, doji, whatever. It's more of a spinning top right below the 0.9750 level. Okay, actually throughout the most of the London session, or even Tokyo session, actually, we've been moving sideways. Okay, as you can see on my screen. All right. And basically, as this retracement trend line gave way and I got my breakout pullback continuation pattern, you know, the type of pattern I usually like to trade, I've triggered my short entry right there at 0.9727. As we made new lows up on the breakout, in order to, basically betting on a continuation of the main trend as seen on the 4 hours time frame, which is the chart that you are seeing right now. Okay, so basically, like I say, you know, typical swinging formation, aiming to exploit a whole new swing to the downside, and triggering the trade upon a confirmation of a breakout of that retracement trend line, upon a bounce of many elements of a few elements of resistance that I saw above that. Like I was saying, the previous swing low, the Fibonacci retracement, dynamic area of resistance, etc., etc. Stop loss level, as usual, placed above the pullback aspect. This is the entry level, first target as the few pips below, hitting the previous swing high, swing low, and then at this point I will exit half of my lot size. I will cash in half of my lot size and move stop to break even, and then well, shooting to for the full projection of this swing, add it to the tip of the retracement. It gets me all the way down to this area. As usual, I exit a few pips before hitting that full projection. Just, you know, a conservative target. All right, guys, that's basically all for now. Very typical, like I said, very typical swing trade, and well, whatever happens, whatever the outcome is, I will keep you updated. Okay, bye bye. Hi guys, this is Hector again. One quick update to let you know that I've taken half of my lot size out at my first target, and I've moved the stop to break even. Pretty painless trade so far. Upon entry, prices moved right away in my direction. Hopefully we'll continue through towards my second target, which is sitting about 100 pips below, but nonetheless, like I say, I'm moving the stop to break in because, well, it's rather late, quite honest, and I'm going to bed. Anyway, whatever happens tomorrow, I'll keep you updated and I'll upload the trade on the blog. Okay, bye bye. Hi guys, this is Hector again. One final update on this trade. Today is the 28th of November 2007. It's 10:30 London time, 10:30 in the morning London time. And as you can see on the second half of the trade that I had opened since 2 days ago on the Australian dollar against the CHF, it was a short entry from here. I rode it all the way down where I took half of my lot size out and moved a stop to break even. And well, as you can see, upon taking, like I say, half of the lot size out, the second portion of the trade remained opened, hoping to, you know, squeeze some more profits to the downside, but instead it's been my stop loss, which was placed at break even or trailed down to break even, has been stopped out. I scored 208 pips on the first half of the trade. And since I only booked half of the trade, half of my lot size there, like I said, plus 208 pips. So for the total account of this trade, I've scored effectively 104 pips on this one. You see, this is one of the reasons as of why I like to exit half of the lot size out right as or a few pips above reaching the previous swing low. Okay, this being the previous swing low. Because sometimes I've noticed that market tends to, you know, form some sort of a double bottom of or a W formation. I've noticed, you know, over the years that when we reach the previous swing low, price, you know, the momentum tends to dry out a little bit. Sometimes we pull back a little bit and then we continue on the direction of the main trend, or well, sometimes we simply just, you know, keep on going through against the trend. Okay. Like I said, that's one of the reasons as of why I like to exit out half of the lot size out at that precise level, just in case we form, like I say, a double bottom, and from that, well, we continue moving against the trend. In fact, it makes sense. Okay, price, in my experience, move in the direction of the trend so much faster before making new lows than after having to make new lows. At the end of the day, you know, in this portion of the trade, the market doesn't have to make an effort in order to score new lows for the day, for the week, for the month, depending on what time frame you're trading. But upon this moment, upon breaching the previous swing low, you know, price has got to keep on climbing, making new lows for that particular period. Okay, and that always, you know, requires an effort for the market, and that's why, like I said, once again, in my experience, it's so much easier to score the first half of the trade than the second one. Okay, so like I say, that's one of the reasons I like to scale out a little bit of profit at that level, move a stop to break even, and from there, if this trend has the momentum enough, you know, to keep pushing down, well, great, I will score further profits. If not, I know that at least I've cashed in some money on the bank, and my stop loss is secure to break even. Alright folks, that's all for this video. Bye bye.